All right, guys. It seems like on this setting of the Google Meet, everybody that wants to speak has to raise their hands, and then they will be admitted. So, uh, yeah, if anybody has anything to contribute to, or you want to raise some points, please feel free to just raise your hand, and then we'll add it into the contributors room. For some reason, I cannot enable you all, even though I would much prefer to do that. Um, okay, but maybe we can start it up from here. Um, yeah, so welcome everyone. Welcome back to our fourth summer transferability community call. It's really great to see many familiar faces again. Um, Today's call is a bit of a bridge between two things. First, I guess the recent DeFi-wide events that have affected um, protocols across the board, and second, the decision the lazy summer DAO needs to take around risk, liquidity, and transferability of the summer. Um, which I will try to keep things structured, but let's make sure, that this is still within a conversational tone, I guess. Jordan, I believe, is here co-hosting with me. He'll help bring the narrative lens on how we communicate this moment to the wider ecosystem and do a short overview shortly. I see Chris has joined as well. Due to his recent post on the forum, I think he'll walk us through some of those and some of the tokenomics implications and the governance levers. I believe we also might have some friends from Block Analytica joining here, Stable Labs as well, and other delegates from the Lazy Summer DAO, which is great to see. As you know, Block Analytica has been instrumental in helping us assess and rebalance risk exposures in the light of these recent events. So it's always we are here, to align, not to dictate anything. Lazy Summer DAO decisions come from calls like this, from the forum sections, from the ongoing on-chain votes, from the community consensus. It's not happening, behind the closed doors. So maybe to begin with, I would like to start with a quick recap of where we left off last week. So the community call 3 was about final readiness for summer transferability and the rollout of Governance V2, which introduces the new lock module, which basically allows holders to stake summer, to lock summer, to gain weighted voting power and earn dual rewards. This is both on the summer emission plus protocol USDC revenue side. Jordan has demoed the new UI, which was great to see for the first time. And we discussed how the setup aligns, I guess, long term with the long term governance participation and with the conviction. Since then, we had the Sherlock audit contest for Governance V2 wrapped up without any critical issues. We are proceeding with the Lazy Summer Foundation multi-sig setup to temporarily whitelist governance contracts. This is just to avoid unnecessary slippage and any potential risks when it comes to locking the DAO out of the protocol. So this is a temporary measure, and it has been already voted on and has been executed. So we are awaiting the next steps from there on. As of now, we are technically still on track for summer transferability, but I believe today's discussion will shape whether that's late November or later in the Q1 of 2026. And of course, we've had some turbulence in the wider DeFi ecosystem, and I think that's what brings us to the next section here as well. So, Jordan, would you mind sharing some of your points on this matter?
Yes, great. Let me just share my screen. Hold on. Great. Can you all see my screen?
Yes, I believe so. It's on.
Okay, great. So I have a brief presentation here. I don't want this. They're mainly just facts. I don't really want to. I have my own opinion, which I'll share. But this is a discussion between the community that has to be decided on ultimately. Extremely soon. So I just want to present the facts, and we can sort of debate them as necessary. I see here a hand. Oh, it's a comment. Okay. But before so here's the really brief agenda. First, I just wanted to address the the Arbitrum vault and the sort of DeFi wide sort of panic last week or a couple weeks ago. I know Block Analytica is here, so I'll also sort of give it to them to speak or have to say whatever they have to say during that, and then once we get that out of the way, which I think is, obviously some interesting points, but or some useful points around that vault, but also I think some great stuff around what happened that week. We will get into the, as we call it, the big decision. I'll give my opinion about it, and then we can get into the most important part, which is everybody's questions and come to hopefully some type of rough consensus. So first, the Arbitrum vault, everything you need to know about that. Basically, if you haven't been on the forum or you've just been lurking, on Twitter, or maybe you've just been looking at the vaults and you don't know anything at all, the TLDR is that basically on November 3rd there was a balancer v2 exploit in which one yield source within the USDC Arbitrum vault was impacted. So specifically the silo SUSDX USDC market, which had exposure to the one balancer pool, and ultimately it was a very nicely growing vault, but it started to decline when there's about 1.48 million of USDC, which we believe to be bad debt, basically. So yeah, Block Analytica acted really quickly with this. They set risk or caps to zero, deposit caps to zero, so nobody else could deposit. But ultimately, it looks like the users that are left in there are going to be basically sitting on bad debt. And with this, there are a couple of next steps within the community. Well, first, there has been a snapshot that's been taken that Lazy Summer users are included in, that if any funds are recovered, ultimately, which at this point I'm not entirely sure that they will be, but maybe, you never know, then those addresses will be included. But there are a couple of very important questions for the community that I've actually commented on. I have I would say pretty strong views about, which is one, the notion of socializing losses. Should that be done? I don't think it's going to be done at this point, but you should comment. Should summer rewards, which are to be renewed, should they be canceled on the Arbitrum vault? Or should there be some type of maybe remuneration for the user stuck in the vault in summer rewards? Very interesting proposition, in my opinion. And should there be a new USDC market deployed on Arbitrum? All open questions. So go to the forum and speak about those things if you have an opinion there. But broadly speaking, last couple of weeks, DeFi had a very dark week. And just as a sort of very brief recap, there was a huge balancer v2 hack, which is a very old protocol, very audited code. So really, this could happen, to kind of anybody, which is a bit scary. So with that, there was a big sort of mismatch in TVL. XUSD sort of lost its peg. Stream Finance confirmed that they had a exposure, a huge $93 million loss, which kind of had this ecosystem-wide spread of almost contagion in a way, where there was multiple lending protocols that had exposure to this collateral, and then ultimately, you had a few collapses of stable coins as well. So that, with all that, a picture speaks a thousand words. These are two charts that you definitely don't ever want to see, which is like that sort of turkey chart going to zero. And blue chip protocols were, definitely impacted in this regard. So even the most like trusted, beautiful protocols that worked perfectly soundly in this sort of risk-off environment, were majorly impacted. Morpho, Euler, Compound, Silo, these great protocols that that are really amazing, had over $1 billion in capital flight, and they worked it as expected, which is the kind of crazy thing. And this really highlights the importance of risk management in things like, for example, lazy summer. And yeah, with that, I'll give it to Block Analytica. Maybe they want to say something briefly, but just generally speaking, I think this sort of tweet kind of sums it up well, this notion of withdrawing first and analyzing later. I think this was really employed within the lazy summer protocol and protected users from a lot of the losses and a lot of the risk that took place. Block Analytica acted very, very, very quickly, and yeah, so maybe they want to say something briefly.
Yeah, sure. Thanks, Jordan. Hello, everyone. DeFi Nicola here from Block Analytica. I will try to summarize the last week's actions and, in general, happenings throughout DeFi from our perspective. So, as some of you may know, on being a yield aggregator, SUMRFi was exposed to, and we at Block Analytica were having an oversight of over a big number of collateral assets, most of those being in yield sources in types of vaults like Euler, Silo, Morpho vaults, etc. And yeah, last week we sensed that there could be a potential contagion coming from the assets that kind of have recursive backing. In a sense, they use their own tokenized yield-bearing assets to collateralize minting more and then looping on some of those vaults. And then, yeah, we tried to act quickly and managed to basically avoid any downturns when it comes to assets that Jordan has mentioned already. So those being the Elixirs, DEUSD, the YUSD of Yield Fi, also the RUSD from Reservoir Protocol. Some of those were directly impacted by the XUSD blow up, right? Some were just experiencing like the huge unwinding of the TVL, mainly due to this recursive nature of the TVL being built up previously. So yeah, regarding and I also like to address. Okay, let me see if I'm. Okay. To address the USDX as well, as Jordan mentioned, this is the project that came public saying that they had lost around 1 million in the balancer V2 exploit. At that moment, we set the caps for the exposures we had to USDX on SUMRFi to 0. That was early November 4th. I believe it was November 3rd that the balancer exploit happened. And we set caps for that arc within the USDC fleet on Arbitrum to 0, and then soon after that we have also set the deposit caps to the USDC Arbitrum fleet to zero as well. And yeah, unfortunately, this was the only scenario in which the keepers were have not been able to enabled to withdraw liquidity from such an arc. This was the Silo USDX 127, and yeah, basically at the time we set caps to zero, potentially triggering keepers to withdraw. I believe the utilization was already at 100%. Since the Stable Labs team behind the USDX was withdrawing liquidity from Arbitrum for undisclosed reasons, allegedly, because of the balancer hack, because this is the only information that got public by them. Ever since the second one was basically after the token has debanked, and it was 2.5 days after that. And yes, another measures we kind of did after that was what you currently can see on Jordan's screen, and that is we kind of wanted to shift all the liquidity away from, especially from delta neutral yield bearing assets, mainly because of the October 10th events and the undisclosed deals between some of the custodians or centralized exchanges and teams running those delta neutral strategies because of the ADL systems. And yeah, we kind of sense that this is something we cannot verify, and that there is significant contagion risk within DeFi. And yeah, we kind of decided to put everything into blue chip only yield sources such as Aave, Fluid, also Compound, but of course not in the Compound V3, but of course not in the comments. The ones that kind of had an impact on Elixir's token. And Sky, SUSDS, and similar. And that's actually the case as it is now. So yeah, feel free to Stables Labs. Yeah, sorry, my bad. Yeah, feel free to ask any questions or leave comments. I would be happy to address those.
And
Thank you so much.
I'll just jump in. Quick question for Block Analytica. In regards to recent events, will you guys be changing your methodology for like risk assessment long term, or will it remain more or less the same with like caution towards like protocols which could be affected, as well as assets that are sort of deriving the yield for different arcs?
Yes, I believe we are gonna make some adjustments to our model, and this is gonna be, of course, public on the forum. The adjustments being mainly to address, the balance between value proposition of the protocol itself, in a sense that we kind of, want to boost the yield of the underlying yield sources we are aggregating, and on the other hand, to, of course, manage the risk properly. So I think we're going to be leaning more on the safe side. So the trade-off basically being the lower boost in the APY side. That will be like Jordan.
Yeah, quick question for me. I mean, I know we have to get moving, but just out of curiosity, is there any thought around like a different like risk tier, for example, where sort of segmenting the higher risk, or what would have been more like even higher than higher risk, I guess you could say. I'm not sure how you would frame that, but like basically segmenting those into vaults that people are they're saying, hey, I'm comfortable taking on this risk, basically. So like a new risk tier that's more risk on.
Yeah, I mean, we could do that. I think, me personally, I think the high risk tier is good enough for now. Also, I do believe this is kind of a more of a also product decision, not just the risk one, and we should, adapt to whatever the SUMRFi community decides on this. But yeah, I do believe that even now the higher risk tier is good enough if we want to go further on the risk curve, which is something we are probably going to be less comfortable with after the events from last week. So yeah, I think the conclusion would be, considering we are now only in blue chip protocols, to gradually roll out to let's say more attracting yields, but only after verifying the backing, and especially when it comes to tokenized, basically hedge funds running those delta neutral strategies. We also, just one comment, I know we are short of time, just one comment. We also considered removing exposure to Athena as well when we kind of wrote and posted a proposal to basically shift our liquidity to only blue chip. But we decided not to, since Athena is basically the only delta neutral token that, and the team that basically posts publicly the attestations of custodians, and basically you can verify that their backing and that they're actually delta neutral. And yeah, we're kind of already speaking with some other teams like Resolve, the USR, to try to be verifying this ourselves. So yeah, let me just keep this call going. Sorry.
Cool, awesome. I think that was really great insight. I just wanted to end on this slide here with respect to the risk stuff, because one thing to really highlight is that I think Block Analytica did a really great job, and just highlights the importance of the sort of active risk management in these different protocols, because these are really blue chip protocols, basically, and you could have been you could have been caught in any of these with 100% exposure, if you're just looking at the yields, for example, on, let's say, Morpho or something like that. So yeah, I think that was really, really great, and just wanted to highlight that. But yeah, so now to the big decision, basically what I think most people are likely here for, is around, of course, the SUMR Transferability event. So as many of you know, Chris B put a proposal or an update to the forum regarding the SUMR TGE, and the brunt of it is basically, we got the protocol got the final audits in. We'll be deploying Governance V2 very shortly, on the 17th of November. But with that just comes a big decision. And the big decision is that, one, Lazy Summer has been invited to participate in the Aerodrome Ignition program, which basically, well, I'll get into what it is in a second, which provides stronger liquidity, marketing, also, I believe spot markets on Coinbase, versus going probably around the 25th of November, so much soon, well, a little bit sooner, although there would be not no liquidity, but less liquidity, for example. So the price would get chopped up a little bit more. And yeah, it would have probably a much greater impact from any sell pressure that there is, which is obviously bad for the price. So yeah, that's really the big decision. I know that there are a lot of community questions, so I tried to gather as much information as I could around trying to answer them. But maybe there are some other people in the call that can also help to answer them. So first, what is Aerodrome Ignition? I've heard some questions just talking to people generally that I think should be addressed here as well, which is, so what is it? So basically, token issuers, so in this case, Lazy Summer, supplies some percent of the supply, so some percent of the summer supply as incentives before the launch to be included into these Aerodrome pools. Then these sort of Aerodrome token holders, I believe it's V-Aero, is a sort of mechanism, direct emissions to those specific pools to collect additional rewards in the form of Aero rewards, which obviously, as everybody in DeFi knows, directs not only marketing and awareness at the pools, but also creates an incentive, which we all know the power of incentives, to participate in those pools, to provide liquidity in those pools, ultimately giving more market depth to the summer pair. Then the token officially launches with emissions flowing to those pools. So as I said, more demand, more sort of activity, more volume, and then then the price, given that there's more market activity, it should lead to a more robust price action, which is certainly what I want, and I assume what everybody else wants. And then the eligible tokens trade on Coinbase as well on day one, which opens up a new frontier of demand as well, which I'm not exactly clear on the details there, but I'm not sure if maybe there's someone from Aerodrome here, or maybe someone knows about that. That would be great to understand how that works. Something somebody asked me is, how do we know, or how does the protocol, or how does anybody know about why won't Aerodrome do more than one team, or why won't they drop it somewhere for something else? And I think there's extremely high confidence that that Summer will be going at that time if the protocol decides to. In terms of technical risks and stuff like that, Aerodrome is already deployed, it's already live, and the program is already live. There are a couple examples that I'll get into. And only one team at a time goes. So it's not like Summer would go and then there would be like 5 other teams at the same time. It's like, it's one at a time, basically. And I think there's some pros to that, some cons to that I'll also get into. One thing the Aerodrome team also says is it's 10x more efficient than traditional token launches, delivering organic market creation and centralized exchange distribution on day one. So some buzzwords there. So I think we should also, try and understand exactly what that means as well. So what do summer holders get? All of that is really nice, but like practically speaking, what does it actually result in? So this is from an example with a syndicate, and really it's around, hey, how much Aero is going to be directed to the pool? In this case, it was $1 million of Aero. So I'm not sure if it'll be more or less than that. So it's an interesting question to discuss. It's going to be a bunch of liquidity on day one. So these are the trade-offs really that we have to consider. There's going to be a bunch of value distributed to voters and LPs, which is of course around the notion of the incentives that are going to be directed at the pools, and then ultimately the big result that I think is a good outcome is a lot of volume in the summer pools, such that price action can be supported or robust. Additionally, there's bespoke marketing services from Aerodrome. As discussed on the previous community call, there's several media partners that are lined up to help the summer launch. So this would amplify those media partners that have already been committed. And then the major thing with those media partners is deeper liquidity. So when they do push the token, push the staking of the token, push the protocol, and ultimately I'll just be blunt about it, push the price of the token, there will be a there, because part and parcel of great marketing is a great product, and in this case, the product is the price of the token to a large degree. In my opinion, my personal opinion. So other community questions that I wanted to address. So how, there was one around, how have these things happened before? Are there examples of different protocols? So there are two examples of ones that have gone live thus far. Syndicate, which is currently trading at 140 million FDV, 1.5 months post-launch. This is a protocol with, from what I can see, no product market fit whatsoever, and a no-name brand. I personally still don't know what it does or what it's for, but they have a token. So yeah, and same thing with the Lit protocol, and this is 2 weeks, so 50 million FDV, 2 weeks post-launch. Again, no product market fit, no name brand. So those are things to sort of compare it to. And why might Summer be a better outcome? We have the protocol has some product market fit, certainly with an ability to deliver more on the customer promise in the coming, let's say, couple of weeks, to further increase that product market fit. I personally think we have a strong community brand. Take this community call for example. There, two dozen people here, and I'm sure much more that are focused on the community. So that's great, and it can amplify that. The protocol already has a go-to-market plan in place, which I don't think these protocols above had in their launches, so ours could be amplified. And perhaps most importantly, Summer token has quite robust tokenomics that have been thought through quite well. So deep liquidity plus great tokenomics are a very powerful combination. So lastly, I think here, what's a good outcome? And these are all from the sort of community questions that were in some of the forum. And really a good outcome is having really great execution on the protocol promise. That's number one. By and far, like, away from all of the other stuff, liquidity, all this stuff. Is the thing working? Is the thing good? Is the APY high? Is like the main, that ultimately over the long term, that's really all that matters. So competitive APY, the best yield sources, and as we saw with Block Analytica, really great risk management. That's the core thing. And that needs to be best in the world, really, if we're being honest with ourselves. Great tokenomics, so staking, boosted yield, lockups, reach and awareness. So having partners and influencers and amplifying the reach with these different influencers. And then, of course, having also deep liquidity. So being able to withstand sell pressure and support a very great price. So this is what a really great outcome looks like. And this is, I think, when we're discussing or coming to rough consensus on what we want to do, these are the four factors that we have to take into consideration, and those are the factors that should determine whether we're going to go in soon or going to go a little bit later, to really hit on these four factors as much as possible. My personal opinion is that right now the protocol promise is waning. which I'll get into when I talk about my personal views. The tokenomics are lovely. I think the region awareness is okay. I think, given that we do have media and influencers that are signed up to help with the launch, but of course, or the TGE, but of course, the Aerodrome stuff could amplify this better. And then without something like Aerodrome, the liquidity would be not as great. So that's also something to consider. So, the choice ultimately is up to everybody. What the best outcome could be. I think those 4 factors could likely lead to a chart just like this, which would be beautiful. And for my bags and for your bags. So, that's something to consider. Lastly, I'll just leave you with my own personal opinion. So what is same here as you think? Basically, I really think it comes down to 2 things. One is the community has, the protocol has waned on the date, not only today, but in the past, in terms of, originally it was, not originally, but, the protocol talked about July, then protocol talked about, I believe, late or early November. Then we got a little delay, but there was never a concrete single date to hang your hat on. I think that's number one, is to have a specific concrete date that everybody can rally around. That is my opinion. I think we should go a little bit later with Ignition, but under the caveat that there's a very specific date that everybody can rally around, and failure to meet that date would be true failure. And then second is the notion of protocol promise. So having a little bit more time allows the protocol to really execute on the promise of having highly competitive yield, and that means having all of the best in class yields. A post from Brenner talks about being competitive on vaults FYI, which I couldn't agree more. So having those great lazy summer vaults, top of vaults.fyi, like at least in the top 10, and then there are a bunch of yield sources in the backlog within the governance and on the forum and stuff. One from KPK, a bunch from Clearstar, a bunch of Midas vaults. Hyperliquid is a new network, so this is a huge opportunity, I feel, to really bring those into the protocol prior to the TGE, and having everybody rally around them before this specific date. So that's my 2 cents. We've gone through all of this sort of objective details. So if there are any other unanswered questions, we can talk about them now, and then ultimately you can have your say in the poll. So yeah, that's about it. Thank you for your time.
Thank you so much for this overview. This was great. Just want to add a small bit. Following the Chris's forum post, seems like there's been a strong community debate about whether we should proceed with transferability this month, around November 18th, 17th, or hold off and align with the Aerodrome's Ignition launch in January. On one side, we have those saying, let's stay on track, deliver on time, give people liquidity from within the DAO treasury, and reward patience. On the other side, the argument is, why rush it? Ignition offers structured liquidity, deeper pairing with stable assets, and narrative moment that can potentially amplify SUMR's visibility. I personally see both sides. I guess the key question is timing versus sustainability. Like, what serves the DAO's long-term interest the best? But this was a great overview. Thank you for that, Jordan. Maybe I would like to open this up. We've had great participation also in the forum this week. I think if anybody has anything to add or has any questions, please jump in and shoot them in. I see Brian posting, will the choice to go with Ignition go to vote? So this is an interesting question. I'm not sure if I have an answer for it. Chris, yeah, you can go ahead.
Yeah. So yeah, I can take this a little bit. So I mean, I think if the community consensus, and I think from this poll as well, like looking at the consensus really around major delegates, if they're voting in this poll as well, that if the general consensus is it's worth the wait, then certainly the labs company will not then propose a vote, because the vote would be to enable transferability. But as always, the DAO is completely permissionless. Votes are completely permissionless, and anybody can post a vote as well on there. Typically, that is done on a Wednesday, but it can be any day. There are a couple of votes actually going up today to do with the Arbitrum stuff last week. But yeah, if there is kind of clear consensus, which at the moment there seems to be, I don't think there's any major delegates voting to go now, which means that yeah, the vote would be just purely symbolic to represent the same. But really, I think the vote should just be up there to enable transferability. Of course, there could be a vote to enable transferability that then gets rejected. But yeah, broadly, if there's consensus to wait, then the Labs Code will not proceed with proposing a vote, but anybody can go ahead and propose a vote themselves.
That's fair. Thank you for that input. I might have another question that came out of Discord. Crunchy Vertex was asking, with the Aerodrome / Velodrome merger announced, could this impact SUMR launch on their Ignition platform? Could it delay things even more? He's suggesting that this is probably something to consider. Do you have any view on this matter?
Yeah, so unfortunately, the kind of main person when people were communicating with Aerodrome were not available to attend the call today. But I have forwarded that exact question to them just to ensure that to get any insight if that's the case. I think the merger in theory doesn't go until Q2 next year, if I read that correctly. So I wouldn't expect it to have an impact. But I have asked them, and if there is any, and I will post their response both to the forum. And then update the Discord channel as well with their response to that. Yeah, but for now, like no official answer. If it would delay, I'm guessing that they all knew that this announcement was coming. So I suspect that January date that's been kind of proposed to us is with that knowledge already.
All right, that sounds good. Thank you so much for this. All right, unless there are any more questions, we can close it at this point as well. The takeaway that I'm hearing is that people want a clear plan, a decision anchored in readiness and transparency, maybe not necessarily market speculation. And I feel like that's somewhat of a spirit of a lazy SUMR DAO governance. But since we're at the top of the hour, we can wrap up. I guess we can also take away a couple of facts from previous discussions that we had around Arbitrum USDC vote, potentially proceeding with removing the USDX exposure or having a vote around this. Whether to socialize losses or not. Also finalize a Guardian multisig for emergency response, which is, I think, a great thing that has been brought up to the forum as well by Chris. Then we have a liquidity reallocation, so looking deeper into Block Analytica's proposed creation of the low risk, medium and high risk ARCs, prioritizing principal safety and sustainability, which is relevant more than ever in these days. With SUMR transferability, I guess the discussion continues on the forum, and I would really like to ask everyone who is interested in contributing to the debate there to jump on the forum, catch up with it. I'll definitely share a recap of this call in the coming days, and we can continue the discussion there as well. And I guess the governance V2 rollout, right? This is, of course, somewhat connected to the transferability as well, but not necessarily stopping the DAO from executing on the new governance, bringing the lockups in, bringing the staking in, and the transferability follows afterwards. I see, Chris, you raised your hand. Please go ahead.
Yeah, just on that, just to give a very quick update. I know Jordan touched on it a tiny little bit, but just to confirm as well that hopefully early next week, hopefully the contracts will be deployed. I think, as was mentioned as well, the foundation, as the Lazy Summer Foundation, has had the multi-sig allowed effectively to have the governor and time lock roles applied to it. So the expectation is middle to the end of next week that governance V2 and staking module will be whitelisted by the foundation, as per the vote that was passed that asked them to vote to whitelist that once the contracts are deployed and tested. So the expectation is staking V2 will go live next week, and then with the start of the governance V1 into governance V2 transition, hopefully finalizing the week after. So governance V2 will take full control of the protocol the week after on that. So it's really from that point onwards then if the community wants to put up a vote to enable transferability or anything like that, or at any point even the community changes its mind. And I think that's the other important thing to stress, even if it's like we should wait if there's any major material impacts in the markets and so on. The community can always put that vote up to enable transferability at any point. But yeah, just to clarify kind of exactly where we are on those on that journey, basically the staking V2 launch next week.
That's amazing. Thank you so much for this update. It's great to hear and definitely something to look forward to. To me personally, this really feels like the DAO is maturing. Having more and more discussions on the forum and reacting quickly to whatever stands in our way. I think it's awesome to see. I also really wanted to put out one more big thanks to Block Analytica, because in our it's like from the early collaboration, it seems like we avoided the direct exposure to the riskiest of those assets that we were earlier talking about that has impacted the market. It is still a wake-up call, but at the same time, it validates the Lazy Summer DAO's cautious approach to risk transparency and professional creation. So again, a big thank you goes out to Block Analytica. Jordan, do you have any last words before we sign off? I put you there on the spot.
I would just reiterate what I said. My personal agenda, I guess you could say, on my personal opinion, which is I feel that there should be a very specific date that people can rally around, and we can drum up, or the protocol can drum up like excitement towards. And I also feel very extremely strongly, extremely strongly, that there needs to be a greater priority on having competitive yields within the protocol, and that means onboarding really great yield sources and deploying to really fast-growing networks, such as, for example, Hyperliquid, as soon as possible, and that should be the highest priority within the DAO, above almost everything else, except for probably risk, which is a delicate balance, and that's it.
All right, that's well said. Thank you, everyone, for showing up and being part of this. As I said, I will post a written recap on the forum thread to follow up. Guess see you on the next call for the updates. We can check on the poll results. and looking forward to the governance V2 launch. Have a great day, everyone, and stay lazy.
Thanks, Jinsei. Thanks, Jordan.
Thanks, everyone.
Thank you, guys.